Hello and welcome to another edition of Better Informed. Today we're going to be talking about mortgages and most importantly the power of leverage. Leveraging property, purchasing property with a mortgage has always been one of the reasons why, frankly, property investment is one of the most popular investments anywhere in the world. Buying a property, investing in property is one of the only investments that you can purchase with somebody else's money, the bank, you can pay off with somebody else's money, the tenant, and you get to keep all the profits. Now, the quickest way for most investors to improve their ROI, their yield on a property, is to purchase it via a mortgage. Now, let me explain that with a brief example. If today you were to purchase a 1-bed, 2-bed townhouse or villa out into Dubai land for 1 million dirhams, and you're expecting to get a rental of that for about 60,000 dirhams per year, you'd obviously have a gross yield there of 6%. Now, add in your service charge, let's say 5,000, it's going to give you a return of 5.5%. Now, 5.5%, if you speak to most property investors anywhere in the world, they'll tell you that's okay. But I don't know about you guys, I want more than just okay. Let's take that same purchase again, but this time we do it with the power of leverage. We use a mortgage. It's 20% down payment is a minimum down payment in Dubai. Today, it's a first time buyer, so 200,000 would be needed to make that purchase, and the loan size would be 800,000. Now, I would take out a 5-year fixed rate. Why? Because I expect we will see some inflation over the coming years, and I want to make sure my payments are fixed as low as possible for as long as possible. I could get a 5-year fixed rate today about 3.45%, and that's going to be a cost annually on interest around 27,500. So take my 27,500, add in my 5,000 service charge, take that off my 60,000, and that's going to give me 27,500 annually. That is a return against my cash outlay, my 200,000, of 13.75%. Now, there will be some purchasing costs you want to add into that equation, but 13.75% sounds a lot better than 5.5% to me. Now, it's important to note that I'm not expecting any money out of that property in my pocket. The 27,500 is likely going to pay off the mortgage over the years, but what it does mean is that come 15 years time, my 200,000 that I've put in is now worth the entire property of 1 million. It's 5 times return over 15 years. And that is taking into account today's prices and today's rentals, which both I think could increase over the coming years. So the smart money leverages, the smart money gets a mortgage. So how do you go about that? Well, very, very easy. We've got 4 fantastic mortgage advisors here at Betterhomes. They're here willing, ready and waiting for your call. So please come and visit us at www.bhomes.com or give me a call and I'll connect you with them. Thanks for listening. I'll speak to you soon. Bye-bye.